Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about one stock that I'm going to be watching this week, and that stock is Apple. So this week is going to be a short week. There's only going to be 4 trading days, and there is already a lot of noise over the weekend for information concerning Russia and Ukraine. At this point in time, due to the fact that I have zero expertise on foreign policy, I am not going to be speculating on what is going to actually occur there, but it is going to be roiling markets. That being said, one of the companies that has done very, very well this calendar year and has been able to withstand a lot of selling pressure in terms of the broader market is Apple. What I've done is I've brought Apple here on the screen, and you can see that they currently command a price to earnings ratio of right at 28x. So that means that their price is nearly 28 times their earnings, and they currently have an earnings per share of right at $6.02. One of the things that I really like about this company, even though they are trading at such a high valuation, sitting here at 2.7 trillion, keep in mind this is a company that was at 3 trillion earlier this year, is that there is still a large percent of the company that is actively held by institutional investors. Now, the numbers you see down here below were as of the last quarter announcement, and you can see that that was at 57.5%. What that means is that there is a significant number of holders in Apple that are not looking to be a short-term investment group. One of the key things that I would highlight is if you go ahead and look at some of the larger funds that track the performance of the S&P 500 and you look at their portfolio, you can see that one of the top companies, and as the heaviest weighted company in the S&P 500, it makes sense, you're going to continue to see Apple sitting up here at top at 7%. You can see the total assets here, 413 billion. A lot of that money is being tied up into Apple. Another large fund that tracks the S&P 500, if you go to VU, you can find that Vanguard has 816 billion. If you look at their portfolio of companies they are tracking, as you can see, 7% into Apple. So this is what's driving a lot of that growth, or a lot of those institutional investors into the company. So one of the things that's noticeable, or something that we should be watching, is that this is a company that is expected to continue to grow after an incredibly impressive year, another 8% this calendar year. So if we go into the growth rates associated with the company, you can see that not only was earnings per share growing super rapidly, even on a trailing 12-month basis year over year, but revenue growth for them was also growing very rapidly. So you can see that it was nearly 30%. And a lot of that was coming from the App Store. A lot of that was on wearables. However, they're also pushing things such as Apple Care, iCloud, Apple Pay, Apple Music, Apple TV, Apple Arcade, amongst a number of other items. So while the company is trading at a very high valuation relative to some of the historical numbers, one of the things that's going to protect some of these valuations, aside from the broader industry, is the fact that the company is sitting on a massive amount of cash. So if you go and you look at the balance sheet, this is going to be the annual numbers. You can see that from a cash and cash equivalents, they're sitting on nearly $62 billion as of the Q3 numbers. If I look at this on the Q4 numbers, you can see that that number actually goes up to $63 billion. One of the reasons why I'm highlighting this information right here is because they have gone on a very aggressive share buyback program, and they are actively repurchasing their shares. So as they continue to repurchase those shares, whenever we're seeing the stock drop, it's going to look at a very attractive approach for them to be able to continue to buy back those shares, which is going to reduce the total shares outstanding, which is currently 16.3 billion shares. And as that is outstanding, it is going to mean that the remaining shares are going to be worth more as those get purchased back. So despite the fact that the company has had a very strong past year, overall year to date, they're actually down just the smallest margin, from around $180 a share down to around $167 a share. They had incredibly strong earnings, and there is a significant amount of cash on hand that they can use to further bolster items such as the supply chain or go into new additional ventures. Some of the markets that Apple is aggressively growing in would be the Chinese market, where they grew 21% over quarter, And another potential move that they could look to make, that I've seen a lot of noise about this but no concrete evidence, would be a self-driving electric car. So there's a lot of moves that the company is able to make, and as such, I think that you're going to continue to see them be a stalwart in the overall marketplace. That being said, the company is still sitting at a $2.7 trillion valuation. If we were to see a market bleed where there was going to be the top names were also going to fall, such as a Facebook, then obviously you would see that drop significantly in a company like Apple, because there is so much market valuation and there are only so many companies that are sitting up north of $1 trillion. So due to that fact, it is something to watch, but keep in mind that underlying all of these fundamentals, in terms of actual growth to support some of that explosive move higher, I just want to highlight year over year with Q4, or really the time period between September and December of last year. It was another really strong quarter, but during that time, year over year, they were still growing total revenue by, in terms of 2019 to 2021, more than $100 billion. So they're not just growing due to just the market valuations, but also due to the fact that the company was able to dramatically capitalize on that growth during that point in time. As such, this is going to be a company that I'm going to be watching this week as a potential mover should we see any relief news, or I expect it to have some limited downside protection due to the number of investors that would look to be making a move on a company of this caliber. So for that reason, that's why I'm going to be watching Apple this week. I hope you find this content helpful. If you do, please leave a like and subscribe, because it really helps the channel to grow. Thanks for watching. Talk to you later.